Hi, Brett. How are you doing today?
Very good, Gilbert. How are you?
Pretty busy. I would just like to start off. Maybe you can give us a bit about the background of Goldshore.
Yeah, absolutely. As you know, Goldshore has been around for just over a year now. We transacted last year to acquire the Moss Lake property from Wesdome Gold Mines, and all the remainder of last year and all of this year so far, we've been working hard on a big drill program to validate the 4 million ounce historic resource and to look at expanding upon it. So we could potentially look at a larger resource in the future, taking steps towards becoming possibly a tier one asset.
Great to hear. So let's focus on your flagship Moss Lake here. What's really the potential you think of this project? And you also announced some recent assay result too. Maybe you can elaborate a bit on that too.
We did. Over the past 6 months, we put a number of results into the market for the Moss Lake Gold Project. A lot of really, really strong results, some high-grade intercepts over kind of long distances. And also, we've identified parallel zones to the historic Moss Lake resource. And that's important for a number of reasons. First of all, our original thesis had that we thought that this resource is much larger and much deeper than originally reported, simply because we felt it was under drilled, both at depth, along strike, etc. And so we saw this as an opportunity to put together a big program and test this thesis and step out from the existing resource, also infilling, but step out from the existing resource. And when we stepped out from the existing resource, we found these parallel zones. And I think that that's significant because it will allow the resource to be much wider and much deeper than it is currently. So from that standpoint, it will bring a lot of tonnage into the new model, and we're very, very excited about the mineralization we've seen along strike to the kind of northeast in the QES zone, and the geophysical signature that goes well beyond the QES zone. So a lot of work still to do, but very, very encouraged by early results.
Great. So let's talk about a bit about the location there too. Refresh some of the memories from the audience. How's the infrastructure there, or any local community work that you need to be focusing on?
Yeah, the first piece of that question, we are located on the Trans-Canada Highway, about 130 kilometers west of Thunder Bay. So when mining companies look at project, and I call it doability, you could have a technical resource, you can have a big resource remotely in the Arctic and other parts of the world, but if you don't have access to infrastructure, the doability of getting these projects into production becomes very, very onerous. But we have everything we need. We have a 4-lane highway, the Trans-Canada Highway. We have an international port 100 kilometers away in Thunder Bay, international airport. We have the most important thing of all this is going to be power. And we have 10-cent kilowatt hour power right on our project site that goes right by the Trans-Canada Highway. So when it comes to road and rail and people and contractors and all the other pieces to build a big district scale mining camp, we tick every box. Whereas, other projects will struggle with how they're going to bring project to a site, the cost of that and CapEx, but also the OpEx if you have to use alternative power means, i.e. diesel. And in this environment, the cost of generating power is extremely expensive and to the point of being prohibitive. So I think the location where we are and the infrastructure we have is absolutely tremendous.
Great to hear. So when we talk about, and when investors talk about investing into certain mining companies, especially the junior market, they all look at, of course, project is the first thing, but of course important is the team, the management. So can you elaborate a bit about your team there?
For sure. We took a very very serious approach to this. I had been in this business for 35 years. And I have built 3 mines in my career. I have worked globally, primarily in the last 10 years in Africa. But I have built gold companies, and I have built copper companies. And Pete Flindell, who is our VP of Exploration, he's been with me for a long time on a number of projects over the last 10 or 12 years. And he has kind of we've been together on all these mine builds and these development projects for a long time. But we assembled a board of people who are, the majority of them are CEOs in their own right, and they have a very, very similar track records. So whether it's our board of directors or our advisory board, the list of names and the track records of all these people is quite substantial.
So you take the project of 4 million ounces to begin with. You see the potential there to add more value to it. So what's your exit strategy?
Well, you're right. I do see a lot of potential with the resource itself on the ground. How this permutates over the next kind of 12 and 24 months, I don't know the answer to that yet. There was thinking that, hey, let's just drill this up to, you'd see if we can get this up to 8 or 9 or 10 million ounces and demonstrate the size of this and the scale of this. But that's not really something the market wants today. The market doesn't want to see the $1.5 billion CapEx projects and 10 million ounces and big production profiles. It's just not something in this macroeconomic climate that I think the market wants, because of hyperinflation, because the high rates of many things, the cost of goods, the cost of steel, the cost of construction. I think the market wants to see something different. They want to see, well, is there a small starter project to this where you can say $200 or $300 million get you into first phase of production, but the scale and the large global resource can't be denied. And so it gives lots of future optionality down the road to expand. And I think maybe that's what the market wants to see today. So whether we go down that route of looking at kind of a phased approach to a project, or whether we look to just to build as large a global resource as possible, I don't think we know the answer to that, because we can't fast forward 12 months and see where the market is, and see where the economy is, and see where inflation is, and see where the gold price is at this stage, because of this highly volatile time we live in. But as far as exit goes, I'm fully prepared to build this, and we're taking all the necessary steps in order to advance this through its stages, through feasibility study and beyond. So we're prepared to do all of that. Now, if that approach and this style of project and this size of resource is attractive to somebody somewhere down the road, we'll have those discussions too. Because I think partnering with with a larger mining company who has the capacity, who has I'll say the balance sheet, who has the teams in place already, there are a lot of synergies in doing that. And in doing so, I think we can deliver value to our shareholders. And that's my sole goal at the end of the day, is how do we deliver the most value to the Goldshore shareholders? So whatever that looks like in the future, we will take a hard look at that.
So Brad, let me give you one last question here, which is important. Do you think that Goldshore is undervalued at this point? And why?
Well, I think if you ask that to any mining CEO today, yesterday, or 5 years ago, everyone says the same answer. Everyone feels that their shares are undervalued because they have such a myopic view of their own project, because they know the detail. And the market is what it is. So do I say we're undervalued today? I'm going to give you the same answer. The answer is yes. And the reason is simple, is because we don't have to discover a resource. We have a historical resource of 4 million ounces. And that historic resource, when reflected into a PEA that was done in 2013 and updated in 2020, when you look at the mineral economics of that PEA, and granted, it's completely different today, and it'll be completely different 12 months from now or 24 months from now when we do another one. It's completely different. But I do know one thing: in a normalized environment, the NPV of this project is between 700 and $1.2 billion post-tax NPV. And if companies like ours should trade around 0.3 times NPV in a normal capital market environment, that puts us around anywhere from $1.50 to $2.50 share price. And today we are sadly trading at 28 cents and about a $37.8 million market cap. So I see this as completely, very, very undervalued. When looking at other valuation metrics, you can look at where we sit within our peer group, and our peer group, a peer group put together by the bank, whereby we have, like for like comparisons of projects in tier 1 jurisdictions, so North America, similar styles of deposit, low grade bulk tonnage type deposits. When we see them and compare ourselves on a per ounce basis, we're trading at $9 an ounce today. Our peers are trading at $30, $40, $50 an ounce and beyond that. So do I see us as being undervalued to the market? Yes. Do I see us being undervalued to our economics? Absolutely. And when we compare to our peers, we are extremely undervalued to our peer group. So yes, I'm going to give you the same answer as others would, but there's basically a bit of an explanation as to why I think we are undervalued.
Great. So definitely hope that a lot of investors will take a look at your company and also think about the same way too. So thank you for your time here, for sharing your story with us here today, Brett.
Thanks, Gilbert, and thanks to your audience for hearing the story today.
Thank you.